Exercise 3D, shares and dividends. So the learning intention for this lesson is to calculate the cost of shares, the dividend and the dividend yield. There's a lot of new terminology in this exercise. And this exercise seems to come up a lot in trial exam and HSC exams. Not necessarily a large amount of marks on questions like this, but I have seen it come up a fair bit in multiple choice questions and of course short answer as well. Okay, so it's really students often struggle with this exercise. I think mainly because of the terminology. Maybe you get very confused, or not you, but students get confused as to the difference between a dividend yield. It's all new language that we don't really use and we don't hear often, so it's easy to get it mixed up. So just pay special attention when you're doing this exercise. Now, starting off with shares. So, most large companies, or not most, a lot of large companies, you are able to invest into. So you're able to buy shares of a large company. So, this happens on the stock market or stock exchange. Sorry, I just went blank there. So if I'm a large company and I want to get some investors, what I do is I divide out a certain share of my company and I allow people to invest in it. They then become shareholders. Okay, so someone who purchases a share in a company is an investor who is a shareholder. Okay, the current price of stock is called the market price. Okay, so what it's worth. Obviously, the price of the value of your shares go up and down, just depending on what the company is worth and what's happening in the market at the time. When you buy and sell shares, you generally do this through a broker. Okay, you don't just go up to someone and just purchase them yourself. There is generally a middleman, and that person gets a brokerage fee for the transaction. Okay, so they have to make some sort of money off it as well. When you are buying and selling shares, GST is also a factor that needs to be calculated. Okay, now let's have a look at this example. It says Lucy bought 500 shares at a market price of $6.80 each. The brokerage fees incurred were $33, including GST. What is the total cost of purchasing the shares? Okay, so she has 500 shares. The market value is $6.80 each. And then we have to add that brokerage fee of $33. So the cost of purchasing those shares is $3,433. Alright, so it says down here, typical company will split itself into a fixed number of shares. Okay, so there could be there's no set number. They can decide how many shares they want to break up into. Obviously, the more shares they have, the cheaper those shares possibly could be. And obviously, the larger the company, the more that they can break it up. They then decide how many of those shares they'd like to make available to the public. Okay, they're not going to put 100% of the shares out of there because then they're giving the whole ownership of the company out to shareholders. They will hold some of them for themselves. Okay, and so the value of the company that is on the market, so the portion of the shares that they're putting out on the market is called the market capitalization. Sorry, that was hard. Okay, so to find the share price, what you want to do is you divide the market capitalization, so the amount that you're happy to put on the stock exchange, divide that by how many shares you want to have, and that'll calculate the share price for you. Alright, now dividends. The whole point of buying shares in a company is so that you can make a profit. So you are investing. It's another way of investing. Some people buy houses, some people put their money into accounts with a high interest rate. Other people buy shares. Okay, so it is a way to make money. The way that you make money is that you're making profit. So as a company profits, as a company makes money, each of the shareholders see some sort of return as well. And that happens twice a year. Okay, interim and final are what those two time periods are called. Okay, and the dividend yield is the annual rate of return. So it's what you make off each share per year. Okay, and that's as a percentage. Now, sometimes you do lose money on shares as well. I don't think it's all profitable. It is a little bit of a risk, but sometimes it's more of a risk depending on how you're doing it and what you're investing into. Okay, but that's with most investments, there is some risk involved. Okay, so to find a dividend is a payment given as an amount per share or a percentage of the issued price. Now, to find the dividend yield, we find the annual dividend, divide that by the market price of the shares, and then multiply by 100. Or to find the dividend itself, you take that dividend yield that you just calculated, so that percentage, and you multiply it by the market price of the shares. Okay, so it gets a little bit tricky, the terminology for this, but the more questions you see, the more confident you'll get with it. Now, example A says the share price of a company is $28.42. The predicted dividend yield is 3.5%. What would be the dividend? Okay, so we're going to find this time, we're finding dividend. So that second formula above. Dividend yield is 3.5%. So 0.035 as a decimal, times that by the market price, which is $28.42. So the dividend is 0.99, so 99 cents per share. So dividend is your profit per share. Alright, now to find the dividend yield. So the company decides to pay a dividend of $1.12. What is a dividend yield? Okay, so dividend yield equals the annual dividend, which is 28. Sorry, it's not 28. It's $1.12. Divide that by $28.42 and times it by 100, and you'll get 3.94%. Okay, so that's your annual rate of return. Okay, so looking at it as a percentage rather than as a price per shield. It's a percentage of the total. Okay. Alright, have a go at those questions in the textbook. There are some HSC questions as well related to this.